dirtbags and degenerates. Welcome back to Trades and Gains. I'm your host, Max Pitts. And today felt like the financial equivalent of a cold compress after a punch in the face. Wednesday was absolute chaos. Thursday was not quite calm, but we're out of DEFCON 1 for now. Trump's tax bill barely scraped through. Yields backed off their 5% hedge, and Bitcoin's climbing like it forgot it's a quote-unquote risk asset. Let's dive into today's market circus, packed with puts, tech cult worship, and solar stocks getting absolutely pancaked. Now, to kick things off, let's talk about our scoreboard for the day. It was a breath, but not necessarily a breakout. The Dow ended flat. The S&P 500 ended down 0.04%, and the NASDAQ was able to edge up about 0.28%. The translation of all this: the market stopped panicking, but don't call it a recovery. Traders are still glued to yields and debt headlines like it's the season finale of debt and deficits. The bond markets also backed off as well. The 10-year was down to 4.55%, and the 30-year was down to 5.07%. After Wednesday's disastrous bonds, but with Moody's downgrade and Trump's fiscal blowtorch, don't expect peace to last for long and volatility to poke its ugly head back in. Now, let's go ahead and talk about Trump's tax bill, or the tax catastrophe that is $4 trillion. The House passes the big, beautiful bill, passed by one singular vote. Blue state GOPs bought off with salt deduction candy. It adds $4 trillion to our current deficit. Like we could really afford that. Moody's already panicking, which I guess that's a great sign. And the Senate vote is incoming, so bring some popcorn. Wall Street's response: mild nausea. Inflation risk just got juiced once again, and that's everybody's fear. Now, we also had Bitcoin doing Bitcoin things. Bitcoin hit $111,878, a new all-time high for the coin. Bitcoin is now trading like it's a safe haven. Why? We have a Trump-friendly crypto narrative, the dollar weakness plus debt explosion, and institutions are FOMOing into digital gold, quote unquote. Ethereum followed with this. Altcoins also perked up, but risk on isn't back. It's just acting like it is for now. Now, we also had some macro that came in today. We had PMI that popped, but so does inflation. Flash composite PMI came in at 52.1, and that is the translation there is just better growth vibes. Prices paid, highest since 2022 right now, and the supply delays are creeping back in. Inflation isn't dead, it's just dressed in business casual currently. And the labor market, we're looking at a slow bleed right now. Continuing claims are at 1.9 million, the highest since November of 2021 right now. We also had no real hiring spike either, which shows that companies aren't aggressively going out trying to grow business. If anything, we're seeing more layoffs than anything. Translation: we're not laying off fast, but we're not hiring either. And that's a slow burn recession signal there. Now, we also had some sector shakeups come in. Clean energy is absolutely melting down. Run is down 37%, ENPH is down 18%, and SEDG is down 15%. Trump's tax bill / green energy initiatives and solar got barbecued. RIP clean tech. 2025 is just not your year once again. Now, let's go ahead and head over to Investor Central Club, our favorite options flow software, and talk about some of our notable prints from today. Now, if you don't have this yet, go ahead and use that code 130 to get your first month for only $30. Let's talk about our big ETF moves, though. So in SPY today, we had $51.6 million come in flow, with $38.46 million in puts. Our top strikes were the $555 put for May 30th. Someone's betting this rally is going to get rug pulled at some point, but let's not be shocked if that happens. IWM, we saw 20.59 million in total flow with 19.97 million in puts. Small caps are basically the market's punching bag at this point, or the Dow Jones Industrial of the indices. We also are seeing QQQ with 22.13 million in total flow, with $14.5 million in calls. That is a mixed lean. And then IBIT, we had 26.22 million, all bullish Bitcoin exposure ahead of more ETF inflows. Now let's talk about some of our single stock madness. We had Microsoft come in here. We had 4 $500 call sweeps for December 25th, equaling about 20 million. And the spot price here was $458.41 when this was bought. Someone's betting Satya is the second coming of AIG. Jesus at this point. Google, we had 185 calls and 225 call blocks with 21.8 million equaling for those premiums, and it's still sweeping like it's not already up 30% year to date, and more people have more hope for more upside as well. Tesla, we saw $340 calls with a $5 million laddered play, betting Elon's rebound arc post earnings. Now, some unusual activity that we had today as well. Let's go ahead and take a look at that. We had AI come in, which was crazy, 290K on the May 30th, $28 calls. I'm currently tracking those. I'll start posting the results on Twitter, but the IV is 122%. That's either bold or you're about to go broke very soon. Now, NVIDIA, we had the 157.5 calls and 165 call dollar prints. High volume, tight fill, and solid conviction there as well. Mr. We saw a $230 put, giving them about 8,500 contracts total. And Betting Sailor tweets the stock into an SEC subpoena. Now, another thing we had, GLXY and GLNG, high IV, weird size, and some wild bets. Someone's playing mad scientist here. Now, when we go ahead and look at our dark pools for the day today, we had KLMN come in with 294 million at the 24-1 spot. Tesla, we had 242.64 million at the 346 spot. We also had Google with a $216.06 million print at the 172.85 spot. And finally, we had RSG with the 209.49 million at the 252.88 spot. So that is what happened with dark pools. Institutions are definitely moving slow, but with intention. And there could be some macro shifts brewing with XLE and IGV seeing some heavy inflow as well. So our final takeaway here, let's go ahead and wrap this up for everybody. Thursday wasn't bullish, it was less bearish. Bond yields cooled, but the debt panic isn't quite over yet. Bitcoin is flying, which equals the dollar doubt, but this is also going to cause a Fed stress test coming. Clean energy absolutely got obliterated today, and options flow still puts heavy under the surface. The Senate vote on Trump's bill is your next volatility event. Watch yields, watch CPI, and yeah, maybe keep stacking sats just in case. Like, comment, and subscribe, and tell us what you're trading or shorting next. I'll see you, hi friends, tomorrow, and have a great night.